the divergence rule, the divergence in terms of market structure. Please and please and please, the divergence rule, we are still going to go back to our BOFS. Let's go back to BOFS and watch the video. The divergence rule and break in market structure. You don't enter a trade when the market has started forming with divergence. No. I'm looking use of divergence for newbies. For newbies, but in a mile, I don't look at the divergence anymore. I just look at my market structure, then I'm good to go. Now, but the newbies, in order for you to catch this thing very easy, just spot a divergence. Now, this is divergence, you know. Now, some people will say, okay, we have a divergence here. Market can start selling and buying, they buy. It's a good idea, but no, it is not a good one, because the market can continue being on divergence for more than years, and at the end of the day, they will not turn at all. The market will not even turn. Instead, it is just going to drop more. Look at for this example now. We have from this particular low, we have been spotting divergence from this particular low down to this low. Can you see? Down to this low. But at the end of the day, there is no what? Change in trend. So imagine you decide to pick all this bottom and say, okay, divergence is working, divergence, 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 divergence. You are going to get stopped out and you lose a lot. So in order to do that, you want to confirm your divergence with what? Break in the market structure. It is very, very important and critical. You want to confirm your market divergence with a break in the market structure of that particular trend you are trading. If there is no break in market structure and there is divergence, the market is still trending. You want to see a particular break. In short, divergence is confirmed only when there is a break in the market structure. A divergence is confirmed when there is a break in the market structure. That is when a divergence is confirmed, when there's a break in the market structure. And that thing we'll be talking about is the relationship between the moving average, order block, and divergence. Moving average, order block, and divergence. Like I said, these are 3 key level areas, and we have them here. So I will highlight this point down to this point. All these areas are key level areas, but I want you to understand that order block cannot cause a reversal or a retracement in a change in trend. It can't. It can't, no. Moving average also cannot. The only thing that can is a break in market structure. No matter where you see a change in trend, there is a break in market structure. So only market structure, a break in market structure has the power to change the direction of the trend. Only break in market structure has the power to change the direction of the trend. Let us know that. Now, if we look at this particular level now, price retraced to the moving averages from the market structure at the first point, retrace it towards the moving average again, form another market structure. Now, if you notice, there's another block at this point. Now, anytime price formed an order block, just know that later on, price is going to fill that place in the future that you can see. For example, market is going down and we have an order block formation around here. What is going to just do is this. This is the order block. What the market is going to do is this. It's going to push price further down a little bit, then retrace back to that order block region. That order block region, that particular spot, yeah. Then it's going to keep on dropping. That is the rule. Then after it does this, then the next one, it might not even form another block. You just go directly to what? Moving average. Then it will drop. Just know that whenever market forms an order block region, that order block is a potential region that it is going to retrace to in the future. Like this is another block. This is it, another block. The market can decide to do this, drop again, then go back to the other block region, and sometimes extend further into the moving average, then drop. They will keep on doing this thing between the moving average and the other block until there is a break in the market structure. Then the trend will change totally. Now look at this particular example. We have another block, other block around this region, another block. But what happened? Look at the price went back to this other block region here. Look at the crosshair. This other block region, penetrate, move higher above this place, then move to this place. Now, if you look at this particular level, this is either a daily time frame retracement. Can you see? It is a daily time frame retracement. That is how we have that particular move. That's how we have that particular move. So the market, there's a break in market structure here from the 1 hour that validated this move up. And that's why the market have to go back higher, even to this other block region. Then what happened? We saw another drop. And after the drop, market form another block here. Look at it. Then they went lower again, just the same way. Retrace gets to the level of that other block. Then they pushed it lower. They pushed the market lower. Form another block here, just one candle. I love to see my other block as an opposition candle. Don't forget that. Then the drop. Form series of bar, yes. I don't not fancy this. These are series of opposition bar. They trend the market in a range-like manner. Form another block here. Look at it, they retrace a little bit, then they drop totally. Form the little opposition bar here. Drop. Then look at it, they went to the moving averages. Then they dropped finally. In dropping finally, they cleared what? Market structure. And when they clear the market structure, remember I told you the market structure is what causes reversal. They extend higher towards the weekly time frame. That is what they are going to. So this is the relationship between the market structure, moving average, and the other block. These are the 3 key level areas whenever you are trading the trend. You want to watch out for them. Whenever you are trading the trend, you put your levels there, and whenever price approach that place, you are position yourself to see a break in the market structure. Then you continue in line with the trend. Now, let me clear something about the market structure. Whenever you are buying, this is the market structure level, very important. You are looking to buy, rather, that means you want to look for a break to the upside. Look at it. The lower high are your market structure levels. The lower high in the market form are your market structure levels. Then wherever you are selling, when you are looking to sell, the higher low are your market structure levels. Please let us have that in mind. Now, I also consider this. The second thing I consider is this. When you come to this lower low level, in as much price has closed below, price went penetrate below my previous lower low. Like for example, here, look at it. This is a lower low. This is a lower low region. This is a lower low. Sorry, I use a small letter. This is another lower low. Why? Because it penetrates lower compared to the previous one. So this is a lower low. So obviously, this is now my new market structure. Please, let's take note of it. I will not say this is a double bottom, so this is the market. No. Now, at this level, so far we have a lower low, something lower than the previous. This is a lower low. This is now my new market structure level. This point. Are you getting it? We have a lower low here. This is another lower low. Good. And that lower low. Now, this is the market structure level. Can you see? Now, price did not confirm the break, then we close. Now, this is the last lower low we are looking at. So any low, whenever market close below this low, then shoot up like a little retracement. It has given me another market structure level. Now, I look at this particular point. This is where we have a close below. Yeah. This particular bar closes below. The shadow, I'm not talking about the body now. Now, this will be a market structure level. You got the eye of this place. Now, if I put my this thing here, I want to look for another close. A very good close. Other block, no? A very good close that is profound. Now, let me clear this. Whenever you are confused about whether this other block it's a market structure level, let me tell you what you do. You have to switch to the higher time frame. Look at it. If you go down to the daily, you notice something. There is no daily bar here that confirms this is a market structure. So at this particular point now, I won't pick this other bar, this other block bar or position bar as my market structure level in 4 hours. I will let's say, okay, I'm looking at 1 hour. This is a 4 hour market structure level. So now this is going to be what? Another market structure level. We continue. So till we get to the low, these are very important. If you notice, I pick my market structure level at this point. Yeah. Why? Why is it here? I picked it here simply because this is the last low. This particular low is the last low, lower than this particular low here. And we have it shoot price up. So this is the key market structure level. Then we have a drop. This is the low. This is the low of this particular, the lower low. This one is lower than this. So my market structure level is this part, last market structure level, the last higher low. That's why I waited for price to close out of it. Can you see? To say, okay, this is now a confirmed break in the market structure. So this is how to, this is a very simple and basic step on understanding market structure.